Today's the last day to get your free money from Moomoo and from Webull, guys, so use those links down below. Get your free money. It also helps out the channel. I appreciate you guys as always, and with that being said, cheers. Let's get into the video. Alrighty, guys, check it out. It's about 4:30 p.m. on the East Coast. We got to break down what happened in the markets today. We'll talk about some stocks. We'll break down some earnings reports, and of course, we're going to break down some charts, so let's just get into it. The markets just closed, like I said, and we ended up closing rather, all in the red, all across the board. The Russell down 1.3%, the Nasdaq down 0.3%. We had the S&P close down 0.6%, as the Dow Jones closed down 0.7%, and we had gold and silver. Let's see here, gold down 0.9%, and silver got clobbered today, guys. Holy crap, silver down 2.5%. So let's break down what is going on, and again, in a couple of minutes, we'll break down some earnings reports from Salesforce, ChargePoint, HPQ, everybody's favorite, Victoria's Secrets, or Secret, whatever the heck it's called, and we'll talk about some other stocks, so let's get into it. SPY ended up, like I said, going down 0.6% on the day, and what I'm seeing here on the 5-day, 5-minute chart right off the bat is, number one, it's an ascending triangle, right? We have a clear uptrend over the past couple of days, but since pre-market today, and of course all throughout today, we've been struggling at 417, right? 417, 418. So we have that clear resistance, but we're uptrending into that, and we're getting into this ascending triangle, right? And if I show you all this intraday chart, number two, the second thing I'm seeing here is we ended up closing off the day within an inverse, or not an inverse, a regular head and shoulders. Look at this. We have the left shoulder, we have the head right here, and we have the right shoulder. And let's see if we have that same pattern on triple Q. We probably do. Yeah, look at that. We have the left shoulder, we have the head right here. And I'm butchering this, guys, but bear with me. Bear with me, guys. Look. Head and shoulders, right? Clear as day. So for tomorrow, what I'm watching on Triple Q and SPY, first and foremost, before anything else, I want to see if we end up breaking out of today's intraday high, and the high from the pre-market being around 417, 418, and that happens to be right around the head of this head and shoulder. So if we get buying pressure out of the neckline, above the head of the head and shoulders, we start breaking 418, that is where the bulls could start taking this for another pop, or another ride to the upside, right? However you guys want to put it, and that is where the ascending triangle will end up playing out. So right now, I had an alert earlier in the day at 416. We obviously broke that. Right now, I'm going to put an alert at 418. That's the level I'm watching right now. And from that point on SPY, I think we could end up breaking out towards 425, 430 in the meantime. We shall see. And when it comes to Triple Q, let's pull this up. This tracks the NASDAQ 100, guys. Triple Q, we're noticing something similar, right? Like I said, on the intraday chart, we have that head and shoulder, so we ultimately have to break out of 312, 313, which is right around the head, the resistance of the head here, and the pre-market high. So if we do end up breaking out of those points, Triple Q might start moving 320 to 330. That's where I think this could be going if we get an extended rally, or if this rally that we have been seeing continues, right? So I'm going to set my alert. Mark is at or above 313. There we go. And the only difference here is between Triple Q and SPY, or at least the main difference I'm seeing, which really isn't a big deal, is we're in a wedge. Triple Q's in a wedge, whereas SPY was in that ascending triangle. So nothing crazy, no big difference at the end of the day, but I do want to make that distinction here, right? So keep your eyes on Triple Q, SPY, set your alerts to the upside here. If we start moving above those alerts I set, again, we could continue this breakout that we're seeing here in the short term. So as always, guys, I want to know your thoughts. Let me know your thoughts in the comments. Are you buying this rally? Or are you buying puts right now? Are you shorting the markets now? Is this an opportunity, in your opinion, to hop in and short the markets? Let me know your thoughts in the comments, and let's do a challenge. I haven't done a challenge in a while. Let's try and get at least 100 likes on this video. Can we do that? Can we do that? At least 100 likes, so smash that like button and make sure to subscribe if you haven't done so already. It helps me out, guys, in the YouTube algorithm, and why wouldn't you want to subscribe? We make the best stock market content breaking down charts here on YouTube. So let's dive into some earnings now. And of course, charts is not the only thing we do. We break down, fundamentals of companies. We break down, news, my thoughts on the markets and so forth. So if you like that type of content, make sure to subscribe if you haven't done so already. So we got Salesforce after the bell, which is CRM. That's the ticker of the stock, guys, if you didn't know. And Salesforce ended up closing down 3% on the day, which is not surprising considering the overall markets did go down on the day today. And look at this. We are shooting up from $160. Again, we went down 3% on the day. Now we're over $170 after the bell. So CRM ended up doing 98 cents versus 94 cents on EPS. So they beat EPS, and they ended up beating revenue, $7.41 billion versus $7.38 billion estimated. So double beat for CRM. And when it comes to their guidance for full year revenue, that is a little bit under the estimate, which I guess the stock doesn't care that much considering, again, it is up about 6% after the bell here. So they see full year revenue of 31.7 to 31.8 billion versus the 32.06 billion. So it is a little bit under the estimate, but at the end of the day, it's not that bad. Not that bad, guys. Pretty decent, I'd say, considering a lot of stocks these days, their guidance, it's just not looking good, right? So CRM, the fact that they're pretty much right in line for revenue, not too bad. And a good thing here is, a great thing, I guess you can say, is they see full year adjusted EPS above the estimate. Right around 474 to 476 is what they're expecting. The estimate is 465. So pretty decent report, I'd say, from that brief glance, the brief numbers that I looked at. Pretty decent report for CRM, and the stock's being rewarded for it. Again, it's up 6-7% right now, $10 after the bell. Pretty solid, but don't get too excited yet because CRM is still clearly in a downtrend, guys, still under the 180 moving average. It is above the 50 here on the 4-hour chart, but not quite yet under the 180 moving average. So I do have my alert set at $180 per share, which if we do break out of there, and we break 185 as well, which was that double top resistance here from the end of April into the early days of May. If we start breaking 185, that is where a big breakout could be coming here on CRM, and that's what I'm waiting for. I'm not going to gamble and buy it now and bank on that to happen. I'm going to wait for the actual confirmation if we do get that confirmation, and if we do, from 185, 190, this could start pushing 220, 225 in my personal opinion. So not too bad for CRM, not too shabby there. The next one here is ChargePoint, CHPT, which went down 5% on the day, and unfortunately it looks like it is down even more after the bell. Holy crap. It got hit all the way to 1146, and it closed at 1279. So initially, this thing was down 11% after the bell, and now it's still down, but it's only down about 6%, 5.5%, 6%, not too bad. So they did revenue, let's see here, revenue of $81.6 million versus $75.72. So they actually beat revenue by about $5-6 million. That's pretty good. Very, very good, honestly. EPS came in at negative 27 cents versus negative 19 cents, so they missed on EPS. The loss was a little bit more, a little bit wider than expected, right? And they see Q2 revenue of 95 to about 106 billion. Pretty interesting range there, but about 95 to 105 million for the next quarter, which I would say that is pretty solid. And let's see here. They maintain their full year 22 sales guidance range of $450 to about $500 million. And I'm not too sure why the stock is falling. Why did it fall 12% initially, and why is it still down 6%? I mean, that report wasn't that bad. I guess maybe it's because that loss was wider than expected. Like I said, that could be the reason. And technically speaking, on the 4-hour chart here, guys, we were slowly breaking out of the 180 SMA. In fact, pre-market, we were trading above it today. But now with this report and the selling later in the day, we are now under the 180 SMA, which is not good. And I had my alert set at 1450. Right now, we're at, 1215, so we're well under that point. So I'm going to set another alert. What I'm going to do here is I'm going to set an alert at maybe $13. I mean, earlier today it was at 13, so if we do end up going back towards that point, maybe tomorrow, later this week, maybe next week, and we start breaking out, at that point, I'm going to be more inclined to watch it. But for now, I'm just being patient, right, and just keeping it on my watch list, guys. We'll see how it ends up playing out. As always, if you guys have any opinions, thoughts, comments, concerns, leave them down below in the comment section. And now let's go to the next stock, which is HPQ, which is HP Incorporation. This stock has been range bound for what, 6 months? Actually, more than that, 7-8 months at this point. It's been trading between $33 as support and resistance, right around $40. So it's been trading in the $7 window for a good 7-8 months, like I said. And now they just reported earnings after the bell, and you can see the stock is right near the top of the range right now at about $38-40. And if we want to get a breakout, obviously we got to take out $41, which is where my alert is right now. So let's see what they did. Adjusted EPS of $1.08 versus $1.05. So they did beat adjusted EPS, and it looks like they beat revenue, $16.5 billion versus $16.17 billion estimated. And it looks like, based on what I have here, let me double check this, but based on what I have in my notes, they cut their full year 22 view for EPS to about $3.79 to $3.93. So they are cutting their EPS, which a lot of companies are at this point, because inflation, guess what? It is eating into margins like no other. You know, some companies, they can fight inflation quite nicely. Others, they can't. And we have the supply chain crisis right now. A lot of companies are, suffering from that. It's just the reality, right? And that's why we're seeing a lot of these companies cut their, maybe not their revenue, although a lot of companies are cutting their revenue, but a lot of companies are cutting their EPS guidance, which is it's not surprising at this point in time. So I'm watching $41 on HPQ, guys. Another one here, everybody's favorite. It is Victoria's Secret, or is it Victoria's Secrets? We'll see. Let me pull it up here, and I forget which way it is. Victoria's Secret. Okay, Victoria's Secret. Okay, I guess that makes sense, right? So they did $1.11 EPS versus 84 cents. So they actually destroyed the EPS estimate, which is good. And revenue came right in line, 1.48 versus 1.48 billion estimated, and they see Q2 EPS of 95 to $1.25 cents. That is 95 cents to $1.25, which is good considering they just did $1.11. So if they actually come in with a higher EPS for next quarter, I guess that's good, quarter over quarter. But at the end of the day, maybe not everybody's looking at quarter over quarter numbers for Victoria's Secrets. Maybe they're looking at year over year. I don't know. I don't really track the stock too much, but overall, that's decent, I guess, that EPS guidance. And again, they beat on EPS for the quarter and came in line on revenue. And let's see here. Do we have anything else on guidance? I'm not seeing anything else on guidance here, but what we're noticing is the stock's moving up. It closed down on the day, 3.4%, but after the bell here, it is up a good chunk. We're talking 5%. Not too bad. 5% move to the upside here after the bell for Victoria's Secret. So I'm going to set my alert. Let's see here. It's still on a downtrend, clearly under the moving averages. We have a death cross, so I'm not loving that. But I will set my alert anyway at $50 a share, which is $6-7 higher from where it is now after the bell, which is fine. If this alert hits tomorrow or in 3 months from now, it's whatever, guys. I want to see if this breaks out of the moving averages. I'm not looking to touch it as a trade until it does that. So the next one here is Amazon, AMZN, which today, guys, what did I say? Amazon, into that split, it could start running. Today it ran in the midst of a red day. That's crazy. We saw a divergence between the overall markets and Amazon. Initially, I said, I think Amazon could run if the overall markets run. And obviously, it doesn't mean it's impossible for Amazon to run while the markets aren't running, because that's what clearly is happening right now. We have that divergence, which is crazy. That goes to show the strength heading into this split. People are loading up on Amazon even though the markets are red. People are preparing for that split. And of course, it's all speculation. Nothing really changes fundamentally with the business. But ahead of that split, people are like, oh, Amazon's going to be 20 times cheaper, right? You're going to divide that stock price by 20 and we're going to get cheaper shares. That's what people are thinking. And in my opinion, why people are loading up on Amazon right now and why it was one of the greenest stocks on my watch list on the day. So we are approaching a big resistance here at about 2600, right by the 180 SMA here on this 4-hour time frame. So I'm going to be watching that very closely. And the thing is here, it went up on a red day. What if we get a huge green day or two or a couple in a row? Maybe we have another big week in the stock market. I mean, if this went up on a red day, imagine what it's going to do if we get a 2-3 day tear in the overall markets. I mean, and especially heading into that split. I mean, this could end up going even higher. So for now, I'm going to set my alert at 2450. Mark is at or above, and we'll just see what it does from there. If it ends up breaking out, awesome. If not, if it ends up getting, sold, maybe we get bears to step in around this moving average. That is fine as well. We shall see. Another one I want to go into, guys, here, which I looked at the chart earlier. It popped up on one of my screeners. I like it. It is Mosaic. Now, admittedly, I don't know much about the fundamentals of this company, but we're not going to be talking about that in this video. We're going to look strictly at the chart, which here on the 4-hour chart, we're clearly in a wedge. Higher lows, lower highs. We are above the 50, but not quite yet above the 180 moving average, which is right around 65, 66 bucks. So in the meantime, I'm going to set my alert at 66 bucks. Boom. If we do break out of that moving average and the resistance point from the middle of May, which is right around 66. And now that I'm looking at it, in the beginning of May at about 67, 68, if this is able to break the wedge, guys, we could get a push towards mid to high 70s, in my opinion. And you might be like, Stas, isn't this a head and shoulders? It kind of does look like a head and shoulders as well. I'm not going to lie. We have a head and shoulders and a wedge kind of at the same time. But again, going back to what I said, 66 bucks, 68 bucks, that also happens to be the neckline of this head and shoulders, right? So if we do crack out of the wedge, break above the neckline, above 70 bucks, 75, 80 is where I believe this could be going. And the last one here is McDonald's, and make sure you guys smash that like button if you stuck till the end. Let me know in the comments if you did as well. I appreciate you all. As always, McDonald's is looking pretty interesting right now. It's breaking out of the moving averages, right? We're slowly testing the top of the wedge here, which you guys can see. McDonald's, like Mosaic, it's also in a wedge. We're making lower highs, higher lows, and now we're testing 250, 255. I think if this starts breaking 258 into the 260s, there could be a big run, rally, whatever you want to call it, on McDonald's stock. So for right now, I'm going to set my alert. Mark is at or above 258. That was the high from the end of April. If we break that point, obviously we got to break the wedge first. Then if we break 258, there could be a lot more upside on McDonald's stock. So that's it for the video, guys. I hope you all enjoyed it. If you did, smash that like button, drop me a comment, and make sure to subscribe and join my Patreon. Now is the first of the month, or the beginning of the new month. Well, I guess it's still technically the end of May. But if you guys want to check it out, now's the best time to sign up. Check it out. Link down below. You get all my buy, sells, call outs, morning videos, everything I'm doing in real time. That is on Patreon. Link down below. And don't forget to get your free money from Moo. Today's the last day to get that free share of Twitter with a $2,000 deposit down below, and you could also get up to 5 stocks, each up to $2,500 if you deposit at least $100. And if you deposit any amount of money on Webull, you get 6 stocks free, guaranteed. That runs out tomorrow. Again, both of those do. All that is linked down below. It also helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you all in the next video. Peace out.